Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. European indices edge up in early trade as the S&P 500 snaps a four-day decline. Japanese two-year yields rise above zero for the first time since 2015. The yen slips following yesterday's momentous surge. Stepping down, Elon Musk confirms he will resign as Twitter chief executive after finding a successor. The billionaire says he will still run the company's engineering teams. Plus, a data release. A House committee votes to release Donald Trump's tax information to the public, capping a three-year legal tussle over the former president's finances. Now, this is the picture for the markets. I have to say, compared to the day that we had yesterday, on the back of what Governor Kuroda said, it's a pretty yawn day. The picture overall is, look, European stocks are gaining about 0.5%. That's pulling some of the S&P futures also up. The U.S. 10-year yield at 3.6842. Now, yen, of course, is where it gets a bit more interesting, 131.56. And then really it's all about, the BOJ and what economists are expecting probably to raise interest rates. The latest really global central bank to raise this campaign of hawkish policy that's proved toxic to balance investing strategies this year. So what that means is that we could also see some of the Japanese investors repatriate some of the money back home. We haven't really seen some big moves for the moment, but of course watch out for that. And then we had some inventory over in the U.S. yesterday. Today, Brent 80.15. Now, the European map, let's have a look at what European equities are doing. You can see the FTSE getting some 0.3%. The DAX, now the interview of the day, of course, is with Mr. Leenders of the government. Our Maria today will bring you that interview. The DAX over there gaining some 0.7%, much like the CAC 40 in France. So the BOJ's decision to widen its trading band for 10-year yields continue to ripple through global markets. Just how sustainable would this yield curve control be? Well, we're now joined by Daniel McCormack, head of research at Macquarie Asset Management and Bloomberg's currency and rates strategist. He is Van Ram from our MLive team. So thank you both for joining us. Daniel, first of all, how much are you expecting a lot of traders but also market participants to test the red lines of the BOJ?
They certainly could do so in coming weeks and months, Francine. Look, it's a big move from the BOJ. It's a real curveball before Christmas. And, you can probably understand why the Bank of Japan is doing it. Core inflation is up, wages growth is up, and maybe Kuroda wants to make a step towards normalization before he steps down in April next year. And I think it just really also goes to sort of reinforce just how the global interest rate structure is now on the rise and possibly in a structural sense.
Yeah, Van, do you agree with that? How do you see it playing out?
Morning, Francine. Yes, I do agree with Daniel very broadly. I do think that the yield curves are going to explode in Japan, particularly at the front end, because we're already seeing the two-year yield at 0%. And I think that that's going to climb up to 50 basis points at the very least by the first quarter, definitely by the first half of the new year. Because, the BOJ isn't going to stop here. I think they will relax the curve control even further to 1 percentage point. So an adjustment higher in yields is required.
Yeah, Ven, I was really struck yesterday, of course, by some of your analysis, including, the yen's 7 standard deviation move. You don't believe this is a one-off bazooka strike. Is this policy normalization?
It is policy normalization, except that they, of course, won't choose to call it that way. It is definitely policy normalization, especially considering that Kuroda is coming down to the end of his term, and it doesn't look like the rest of the finance ministry and the rest of the people at BOJ share his vision of a weaker yen and a higher inflation. And I think there is too much of national pride involved in letting the yen go down or make an adjustment as is required by standard economics textbooks. So I think that there is a lot of pressure on the BOJ to shore up the yen. And in a scenario where the Fed keeps going on rates, it is presumable that the BOJ will have to relax the curve control even more. So this is not a one-off measure for sure.
So, Daniel, how do you see this playing out? First of all, Daniel McCormack, when you see, how much do you see, of course, of money coming back into Japan, and in what timeline?
So it could come back reasonably quickly, Francine. I mean, Japan is a huge exporter of capital. For a long time, Japanese domestic savers have received virtually zero return on their money, and now it looks like that is set to change. And the impact that has on global capital flows and global liquidity could be significant. And of course, you're layering it on top of the fact that central banks everywhere are tightening. We've got QT going on. So I think as we go through 2023, liquidity conditions generally are going to tighten up. This era of money everywhere, just money sloshing through the system, is clearly over. And this move by the Bank of Japan just adds to that.
So, Daniel, you also argue that actually our economies have profoundly changed. Do you think equities or investors have realized that? Are they pricing in the structural change?
So not in my view. And the structural change you refer to, Francine, is our view that the supply side, growth in the supply side of the global economy has slowed down in a structural sense. And what that means, of course, is that going forward, you're going to have a bit higher inflation than we've been used to for a while, a bit higher interest rates than you've been used to for a while, and more volatile GDP growth. And if you look at, say, where the S&P 500 is today, where it's trading on about 18 times based on the latest numbers that I looked at, long run average is around about 17. That doesn't suggest to me, with the PE above the long run average, that investors have fully recognised this and are pricing it in. So I'd expect not only additional pressure on earnings over the next 6 months for the S&P 500, but perhaps some pressure on the multiple as well.
Ven, do you see currencies being smarter about some of the shifts that will change into a higher inflationary environment?
Yes, I think that there's going to be a paradigm shift in currencies going into 2023. 2022 was, of course, the year of dollar strength, inordinate dollar strength. I think that's going to fade into 2023. And the currencies that are going to make a huge comeback, or the euro, the yen, and the pound, because those are the regions where the central banks are likely to be much more active in raising rates, rather than the Fed, which is approaching the top end of its of the terminal rate that it indicated in the dot plot.
But do you see, Ven, what's the currency that actually mispriced the most? I don't know whether mispricing is the right word, but is there something where you know, there's a long way to go if the central bank's going to achieve their goal of inflation next year?
Definitely. I think that the yen is fundamentally undervalued, and by a whole lot. If you look at purchasing power parity terms, the yen is probably the cheapest it's ever been in its history. And if you look at other measures, if you look at nominal rates, if you look at the inflation-adjusted rate differentials, I think that the yen is massively undervalued there as well. And I do think that, you know, all of that, it's not going to erase all of those that undervaluation at one fell swoop. But I do think that it's going to start improving from here on and start appreciating from here on. And I think that we will probably see the dollar yen go down to 118 levels next year if the BOJ continues with its normalization.
So, Daniel, thank you for that, Ven. Daniel, where do you see the biggest shift, or how do you play everything tactically?
In terms of the yen, I mean, I think I would agree that the yen is undervalued. I think certainly that is true from a price level perspective, but I think any move higher in the yen is going to be dependent upon the BOJ continuing to make moves to normalise in 2023. I mean, tactically at the moment for asset allocators, I mean, we prefer bonds over equities as we roll into 2023. We think inflation is going to come down. The developed world economies are going to go into recession. The Fed is close to peaking out. That adds up to a pretty good 6 months for bonds, while, as I mentioned before, I think equities are still a little bit overvalued. We would also argue that, you know, real assets, and particularly infrastructure, are a great play next year. Gives you inflation protection, yield, defensiveness, access to structural growth drivers rather than cyclical growth drivers. So all of that, we think, adds up to a good outlook for real assets and bonds. So that's where we would have our money.
But Daniel, where do you see, so real estate, where do you see the most value? I know we're also looking at a change and shift with possible deep housing market crashes in certain parts of the world.
The outlook for real estate is less good than the outlook for infrastructure, I would say. And the key issue there is that real estate just has greater sensitivity to interest rates. So the push up in risk-free rates is causing cap rates to go up, and financing costs have risen now and are above cap rates in many instances. So there's certainly some pressure on real estate globally. Look, we like rental housing, particularly rental housing in sort of Anglo-Saxon markets such as the US and the UK. Probably lower on the list would be things like secondary office, which we think are facing both cyclical and structural headwinds. So cyclical demand deterioration next year as the developed world goes into recession, and then just a structural headwind from all this working from home. So there's certainly things that we like, but overall property is probably less attractive in 2023 than, say, infrastructure.
Okay, thank you both for joining us today. Daniel McCormack, their head of research at Macquarie Asset Management, and Bloomberg's Van Ram. Now, coming up, Musk out. The billionaire confirms he'll step down as chief executive of Twitter once he finds someone, quote, foolish enough to take the job. So we discuss that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. of Francine Lacqua here in London. Now, Elon Musk says he'll run Twitter software and servers team once he's found someone, quote, foolish enough to replace him as chief executive. A source says he had already embarked on the search for a new chief executive after losing his own poll, asking whether he should step aside. I think that was about 78 hours ago. Now, for more on all of this, let's bring in Bloomberg TV's technology co-anchor, Ed Ludlow, who, of course, follows Elon Musk very closely. So, Ed, first of all, big names out there. I mean, there's a lot of speculation on who could and who would want the job. What are you hearing?
Speculation is the right word. I mean, I've spoken to a lot of sort of investors in the private company and also former Twitter insiders, right, who have kind of left of their own volition or been fired. And, you know, there's this school of thought that he has this group of Silicon Valley associates. They call it the Fix-It team. Jason Calacanis, David Sachs. Those two first names, a lot of skepticism that they actually have what it takes or what Elon Musk is looking for. The other name on that screen, Sriram Krishnan, he's a partner at Andreessen Horowitz. He kind of specializes in crypto. He's an engineer by background. Folks I've spoken to say that's more likely. The problem with all of these is that we don't actually have a good sense at all if that's where Musk's thinking. What we know is he doesn't want this manager type. He wants a tech nerd, an engineer, a software person. Yeah,
we also don't know whether he really wants to step down because he's stepping down after a poll asked him to step down. And so the dynamics between him and the new chief executive could be quite awkward.
Oh, I mean, there's always risk in trying to guess what's going on in the head of Elon Musk. But, you know, he at Tesla and SpaceX doesn't consider himself to be the chief executive officer in sort of the legacy or traditional sense of the word. He considers himself an engineer, somebody that's focused on the product, the innovation. And that's the kind of person he wants to bring in, which is interesting because Musk, confirming overnight that he would step back as CEO, said he'd remain handling that side of the business, the engineering side. He wants a technologist to come in and help him, so it's not clear how he'd run the company. You also have to find somebody that can work with Elon Musk.
But Ed, so what I don't understand is he trying to create the super app? Because that's why you would need technology. I mean, if it's just a kind of, you know, social media Twitter platform, I don't know what, you know, how the technologies would actually change. It's more of a moral values issues that we're dealing with and a trust issue that's been lost.
We think so based on the emphasis he's put on the need to invest in servers, right? Why do you need more servers or more capable servers? Well, you're probably trying to run a broader set of data. Why run a broader set of data? Well, you want this to be the everything app. You know, he's kind of floated the idea of payments already. Remember, his background, everyone forgets, is PayPal. That's kind of where he made his name in Silicon Valley. So adding payments functionality. But you're completely right on the content model.
Trust, right? The problem is that if you don't trust what's happening at Twitter, and a lot of people have gone off and a lot of advertisers have stopped advertising, then how does he build the app?
Yeah, I think the concern is that right now he himself is making a lot of the content moderation and policy decisions, and he suspended what has been a long-standing team, the trust and safety team at Twitter. So a lot of folks are asking, well, hold on, if you're trying to bring in a technologist and you yourself are focused on engineering, who is going to focus on this? The original idea of having sort of an independent body of various names to make those policy or content enforcement decisions, that was suspended too. So we're in limbo a little bit in that area.
Yeah, limbo a lot. Bloomberg TV's technology co-anchor there, Ed Ludlow, with, of course, the inside scoop on what's going on at Twitter. Now, a House committee voted to release Donald Trump's tax information to the public, ending a 3-year legal battle initiated by Democrats. Joining us for more on all of this is Bill Ferries. He's our senior editor for Bloomberg Asia. Bill, what did we actually learn from this latest release? What are the red flags that Congress's nonpartisan tax experts cited?
Well, it's been very interesting. We don't get the tax filings for probably a few more days, but the report we do have lists some very questionable deductions, loans to Donald Trump's children that could just be outright payments, and other kind of charitable deductions that weren't well documented that would raise a lot of red flags for many ordinary people, let alone someone with as high-profile a job as President Trump had. So it kind of adds to a lot of the questions about why he has withheld these tax forms and what it might mean going forward.
So why the urgent release of these documents now?
Well, I think why we're getting them now is, you have this committee. First of all, the Ways and Means Committee didn't get access to some of these documents until just over a month ago. And of course, you have the political calendar. The first week of January, Republicans will take over the House of Representatives. This is not the kind of inquiry they would be pursuing. So the Democratic-led committee has just really a few days on its calendar to get some of these things out. They would argue it's in the best interest of transparency and good governance going forward. A lot of Republicans and the former president himself would say it's all about politics.
Yeah, so, what impact, Bill, and we need to see the release, of course, but what does this mean for Trump and his bid for the presidency in 2024?
Well, it's already been a rough several weeks for the president. He had his company was convicted of tax fraud. He, of course, hosted that dinner with a white supremacist. And he's seen a lot of his, or some of his support shift over to Florida Governor Ron DeSantis after kind of a lackluster start to his campaign and the loss of many Republicans in the midterm elections. So, I think for people who are diehard supporters of the president, this doesn't move the needle at all. But for those Republicans who were looking for an excuse to maybe support other candidates or try to get beyond Trump, this is just additional fodder for them to say it's time to look for someone fresh to lead the party.
All right, Bill, thanks so much. Bill Ferries there, senior editor for Bloomberg Asia. Coming up, first, face-to-face appeal. The Ukrainian president, Volodymyr Zelensky, will make his first trip abroad since the war began. We look into the significance of this visit to the U.S. later in the hour. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Federal authorities are set to whisk Sam Bankman-Fried to the U.S. today to face a range of criminal charges related to the collapse of the FTX crypto exchange. Bankman-Fried will sign documents at a Bahamas courthouse, finalizing his waiver of rights to fight extradition. After that, the FTX co-founder will be accompanied by FBI agents on a non-commercial aircraft back to the U.S. Now, Elon Musk says he'll run Twitter's software and service teams once he has found someone to replace them as CEO. A source said he has already embarked on a search for a new chief executive after losing his very own poll asking whether he should step aside. Musk made the announcement in a tweet declaring he'll go once he can find someone, quote, foolish enough to take the job. Ukraine's President Volodymyr Zelensky is traveling to Washington today to meet President Joe Biden and also address Congress. Sources say Biden will host Zelensky at the White House. The speech will follow an expected move by the Biden administration to announce a delivery of Patriot anti-craft missiles to Kyiv, ratcheting up U.S. support. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Leanne Gerrans in London. Now, quite a lot of movers actually, for a quiet day, a couple of days before the holiday season. I'm looking at these three. Thank you, Mohammed, for putting them together. First of all, Adidas getting some 8.4%. This is on the back of Nike posting another quarter of inventory buildup. That's the not so good news. But the good news is that quarterly sales actually exceeded Wall Street estimates. That means that investors are less concerned about the future. Shares of Nike were up in late trading, and that's giving a boost to rival Adidas because of a lot of investors think that they will also report some robust sales. Deutsche Post gaining some 1.4% after FedEx also beat estimates. And then finally, the EU actually approving a huge Uniper rescue on the back of that, 3.5% higher for Uniper. Coming up, we look at Amazon and other technology stocks. This is Bloomberg. Ripples continue in markets on day two after the BOJ's shock policy change. European stocks rise after the S&P 500 snaps a four-day decline, while Japan announces further bond buying to defend its upper yield limit, while two-year yields rise above zero for the first time since 2015. Stepping down, Elon Musk confirms he will resign as Twitter chief executive after finding a successor. The billionaire says he will still run the company's engineering teams. Plus, data release. The House committee votes to release Donald Trump's tax information to the public, capping a 3-year legal tussle over the former president's finances. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, these are the big movers, and actually, we need to spend a bit of time talking about this because the one I was really interested in was Nike and FedEx. Now, FedEx, of course, because of these two better-than-expected companies reporting in the U.S., it's really giving a lift to some of the companies that are in the same sector here in Europe. So Adidas, of course, a direct competitor to Nike, Deutsche Post, a competitor, or certainly a peer to FedEx. So first of all, FedEx reporting fiscal second quarter earnings that beat analyst estimates. And this is because they were able to, increase prices. They were also able to cut costs, and that made up for decline in package volume. So I'm looking at a couple of analyst notes, and they basically believe because FedEx could do it, a lot of the similar parcel delivery services in Europe could also do the same. And then Adidas gaining on the back of Nike reporting some pretty robust sales. The pileup in inventories continues, but they were really able to increase sales. And then Uniper very quickly gaining 4% after the EU approved a rescue package. Let's turn to the tech space now. And layoffs accelerate across some of the biggest names. What are the tech jobs of the future? Well, Amazon has released its top predictions, which includes a paramedic drone programmer, an AI expert with medical knowledge that will teach drones to assist rescue teams. Well, joining us now is Lauren Kisser, Technology Director at Amazon. Lauren, thank you so much for joining us. This is a fun and very important segment because a lot of people watching won't have any idea of what these jobs of tomorrow look like. First of all, is it technical skills like medicine or coding, or is it really value skills, the moral skills, the jobs of tomorrow?
Hi, thanks for having me. Yes, I think it's a combination of all those skills, right? We have the technical skills like an understanding of computer science and coding, but also the understanding of the perhaps sector you're in. For example, if it's farming, having an understanding of agriculture, or fashion, a real solid understanding of the fashion industry and the skills needed to, make clothing and bring fashion to reality.
So, Lauren, it doesn't really change. So, I look at some of these, jobs of tomorrow and paramedic drone program. And so I read all of your synopsis and I understand what it is. A lot of people at home won't. It's teaching drones to be vital assistants to rescue teams. But does it actually change what people should study at university? Or is it the same skills just applied in different jobs?
Well, I think having a solid understanding of computer science and really, machine learning and artificial intelligence really will enhance the skills for an awareness of the skills needed for future roles. So, for example, the paramedic drone programmer that you brought to life there, right? It has skills that require, coordination, medical knowledge, soft skills like problem solving, and having that mindset of thinking ahead and what does maybe the drone need in a certain situation, as well as hardware skills, understanding the components of the drone, as well as communication and calmness under pressure.
Okay, I love that. I mean, I think when I grow up, Lauren, I want to be a metaverse architect because it just sounds so cool on a CV. Do you have to be a Norman Foster architect, or do you have to be a coder?
Right. I think having coding skills is important, but also those creative skills that you can bring to life. Really, even a real solid understanding of what's going on in popular culture, being able to bring together that, what's happening in society in the metaverse. So there's that creativity, but really having an understanding of artificial intelligence, as well as, if you want to go into computer science or programming, having those skills as well. But there's also skills around gaming and understanding how the gaming systems perhaps work, or systems engineering, as well as those key programming skills.
Lauren, what's an AI speech coach?
AI speech coach, great example of where someone would be teaching the AI, for example, as AI becomes more prolific in our society, teaching maybe different dialects to an AI system, encouraging the system to become more natural sounding and more relatable. So it's really working hand in hand with that AI system to bring a more natural response to the system.
Okay, I was a bit perplexed by the AI creative skills producer, but I would like to remind everyone that's watching at home, don't be freaked out. I mean, when you actually read some of the skills, it makes much more sense than just seeing the job description. Lauren, what's an AI creative skills producer?
And I mean, it's really taking the creative skills of the future, and maybe programming different shows, and having an understanding of how to bring to life different programs or different creative outlets, and again using AI to enhance or augment a show or a program.
So, Lauren, I mean, I guess the difficulty with some of these, right, and you talk about just the need to be the best in fashion, social media, music, sports, and healthcare if you want to get some of these jobs of tomorrow. But how difficult is the skill set? We talk about retraining, we talk about people being displaced and needing to find work because we have a skills shortage. How do you do it at Amazon? How do you find the right people with the right technology skills?
Yeah, I think, having the right skills and background and understanding computing and coding, as well as artificial intelligence and machine learning, having those skills enhances kind of roles that we already have, and looking at, reaching out to young people. We have our Amazon Future Engineers program, which is set to inspire school kids, particularly those from disadvantaged areas, to have a better understanding of computer science and artificial intelligence, and really just an awareness of computer science. Like, not everyone's going to be a computer programmer, but I think, AI and the future of tech really cuts across all sectors of our economy, and having that awareness and enhancing that, understanding of what's involved in making these products come to life is important to us. And so we've aimed to inspire kids to kind of think about, okay, where is, AI going in the future? We predict, 70, the AI roles could contribute over 71 billion to the UK economy, and jobs are set to expand by 40% in the next 5 years. And as you mentioned, there is that skills gap, and so we're looking to inspire school kids to really fill that gap in the future.
Lauren, at number 9, you have a community care technician, and this requires empathy, social skills, a caring attitude, and patience. Are we going to see more kids also studying, softer skills like that, but also philosophy? Again, it goes back to a question of morality.
There is that empathy. You need those social skills to be able to, bring that care to life, and then having, really understanding patterns in society and social engagement, and kind of what different maybe care spaces need. So you definitely need those skills. The soft skills are super important, right? We need empathy. You need the ability to organize a lot of data and kind of understand what's happening in the world and be able to bring that care using AI to life.
Lauren, if you were to go back, I'm trying to think of what I wanted to become. Is there one of these jobs that you think you would have liked to do?
I mean, they're all really interesting. I think for me, bringing, these products to life kind of across the broad spectrum. But I am really passionate about the augmented learning technician, for example, and that's better understanding maybe where students are in their program and their study, and understanding kind of at the individual level where a student might resonate more with the teacher, and then being able to kind of extrapolate why that is, and then bring that across the whole of their studies. And so it's using the learning environment, really being connected to kids at the individual level. And then I am a keen teacher and learner, and so I love that space, and being able to use AI to enhance the learning process is amazing.
And that's brilliant. Lauren, thank you so much for everything. Lauren Kisser there, a technology director at Amazon. Coming up, first face-to-face appeal. Ukrainian President Vladimir Zelensky will make his first trip abroad since the war began. We look into the significance of this visit to the U.S. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Ukraine President Volodymyr Zelensky will leave the country for the first time since Russia's invasion to meet U.S. President Joe Biden and address Congress in person. Meanwhile, the Russian gas flows are continuing via alternative links after an explosion at a pipeline that goes through Ukraine and supplies gas to Europe. Now, for more on both these stories, we're joined by Piotr Skolimowski, our Warsaw bureau chief, and Bloomberg's Oliver Crook in Berlin. So thank you both for joining us. Piotr, first of all, what is the significance of Zelensky's visit to the U.S.?
Hi, Francine. It's very important. Obviously, we're talking about the situation where 300 days into this war, and it's the first trip by Zelensky abroad since the war began on February 24th. He's just been visiting his troops in Bakhmut, which is far in the east, where the very significant fighting has been going on, and he's been handed this flag by his troops that he will now deliver to Biden, apparently. So he's going there, he's meeting Biden, and Biden is, from what we're hearing, is going to unveil a new package of aid to Ukraine worth almost $2 billion, and also announced moves to deliver Patriot missile batteries to Ukraine, which will strengthen air defense for Ukraine. Also, then it's obviously just a couple of hours of meetings, but then Zelensky will address Congress, where he's going to appeal for more aid. And obviously that's important because Congress it's moving to the control of the House of Representatives. Will move to Republican parties, where some lawmakers are not really on board with unconditional aid for Ukraine.
So the war, Piotr, has continued for 10 months almost. Is there any sense of when it might end or where it's headed next?
At this point, what we're seeing, we're in a bit of a stalemate, which means the action on the ground has basically ground to a halt. Part of it is the conditions. It's muddy. You can't really expect any movement of troops right now. But what we're seeing is that the main cities, Kiev especially, are being shelled by Russia. That includes attacks by drones, which has crippled infrastructure. So most of Kiev is without electricity, with water is barely being restored. So we are at the point where Ukraine is worried that Russia is preparing a new assault. They've been sending signals that Russia is massing troops on the eastern part and might actually try to attack come January or maybe spring. This hasn't been confirmed by the Western intelligence, but we're definitely gearing up for something. We just don't know what it's going to be. Obviously, that means this war can continue. Although an interesting development today, the meeting with President Xi Jinping, Chinese president, and former Russian president Medvedev, and Medvedev heard from Xi Jinping that China wants peace talks over Ukraine. So maybe there is some hope there, but at this point, we're in a stalemate.
Okay, and Ali, thank you, Piotr. Ali, what has the war cost Europe in terms of energy?
So in terms of the war in Ukraine for Europe, it's been measured in bailouts, it's been measured in aid, it's been measured in energy prices that have absolutely skyrocketed, and it's been measured in hundreds and hundreds of billions of dollars. If you go just by market pricing, Bloomberg has crunched the numbers, if there was no aid from the state or anything like that, for companies and households, it would have cost this year $1 trillion. Now that doesn't take into account the aid that we have seen from governments, but that is what it would have cost if there had not been any help. And that doesn't take into account what governments have also had to do, which is bail out the likes of EDF and Uniper. All in through November, Bruegel estimates that governments have spent 700 billion euros in order to deal with this energy crisis. And going forward, this really speaks to how much money this is going to cost for European governments, many of which are already stretched. So if this goes on for over and over again, that $1 trillion is going to continue to add up, and it's going to have to be shared across industry, across households, and across governments. Just how is still to be seen.
So, Ali, what's the outlook for gas going forward?
So in the shorter term, it's all about storage and it's all about temperatures. The temperatures have come down. Storage is in decent shape. That you've seen natural gas prices come down as a result of that. But in the medium term, it's all about LNG and whether these cargoes are going to be able to make it to Europe. There's a lot of concern now that because of the price cap that Europe has put in, we're still some distance from it. But coming into next year, with China coming back online, demand for gas could go up to 7%. That's from one of the Chinese state-owned oil companies. That could come there if they're back at the table with a huge appetite. That is all going to be competing for the same LNG cargoes, which Europe is afraid that they may not be able to get their hands on.
All right, thank you both for joining us. Piotr Skolimowski there, our Warsaw Bureau Chief, and Bloomberg's Ollie Kruk in Berlin. Now, coming up a little bit later today, we have an exclusive interview with Germany's finance minister. He's Christian Lindner. Don't miss that interview. Our Maria today will bring that at 1:30 p.m. UK time. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The European Union has approved Germany's nationalisation of Uniper with a long list of conditions. The EU signed off on a €34.5 billion rescue package for Uniper, the biggest in German history. But the gas company must sell power plants in Germany and Hungary, and the government has to reduce its shareholding to 25% by the end of 2028 to satisfy the Commission. Now, Nike's quarterly sales and gross margin have exceeded Wall Street's estimates. Global sales of the world's largest sportswear company rose 17% to $13.3 billion, beating estimates of $12.6 billion. Nike credited expanding digital leadership for the revenues. Gross margin fell to 42.9%, but that was still above expectations. Bloomberg has learned Deutsche Bank is considering giving some of its top earners over in Germany and other key markets an elevated salary increase to help offset surging inflation. Sources say base pay is likely to rise by as much as 4% on average. We're told it also plans to cut bonuses for investment bankers who have seen weaker performance. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Leanne Gerrans in London. Coming up, no early Christmas gift as strikes in the UK are set to continue in the new year. More on that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, unions have made a final plea for the Prime Minister Rishi Sunak to discuss higher pay settlements for workers in the NHS. That's as ambulance staff go on strike following industrial action by nurses. Well, joining us now is Bloomberg's Lizzie Burden. So, Lizzie, thank you so much for coming back on. I guess, the problem for Rishi Sunak is that he's refusing to commit to greater pay increases for NHS workers, and so they're striking.
Yeah, and really, he needs to step up from being the Chancellor to the Prime Minister, so people say, because in the history of strikes, what happens is you negotiate and then the strikers go away. You don't give them what they want, but you meet them somewhere in the middle. At least this is what the nurses are arguing. They say until there's a negotiation, they're going to keep putting strike dates in the diary. At the moment, they're saying if you don't negotiate this week, we're going to have strikes in January. And the risk for Rishi Sunak is that this carries on going all the way to 2024 and it dominates an election like it did in 1974.
This is not about the economics, so it's about politics. So how does he navigate this?
Well, I mean, he's just making economic arguments. So he was at the Parliamentary Liaison Committee yesterday. His argument is that inflation is public enemy number one, that fighting it is not just going to help the nurses, it will help everybody. And giving into the unions is only going to add to the problem. Now, we saw in the public borrowing figures this morning, it's the highest on record for November, even higher because of the cost of servicing that debt because of high inflation and high interest rates. That in itself was a record. So the government's argument is if we pay the nurses more, it's going to add to the borrowing or take away funding for frontline services.
Yeah, but frontline service, striking is really a disaster, especially over Christmas.
Yeah, and it was already an issue before the strikes. We had long waiting lists here, but now this is dangerous. These are dangerous times. So you've got expectant mothers told that they're going to have to not have home births because the ambulances aren't there to take them to hospital. People with heart attacks and strokes may have to wait to get to the hospital, and people with falls may suffer big delays. Now, the government says it's the union's fault if people die. The unions say it's the government's fault if people die. We really are in a crisis moment.
Yeah, we certainly are. Lizzie, thank you so much for staying on top of it. Lizzie Burden there with all of the latest on the UK and, of course, some of these strikes over Christmas. This is a picture for some of the stocks that are moving the most now. We have 3 German stocks. We didn't do it on purpose, but actually a lot of the US companies coming out with figures yesterday that beat expectations are having an impact on some of the bigger market cap companies in Germany. So Nike actually reporting some robust sales. That's giving a lift to Adidas, gaining some 8%. They were able to really put away some of the investor concern that Nike could not really continue growing sales as much as they have in the past, but they surpassed those concerns, and Adidas, do you see one of the biggest gainers? Then we have Deutsche Post. This is on the back of FedEx, saying that their profit topped estimates as they were able to cut costs and increase prices. And finally, Uniper, the EU approving Germany's nationalization of 2 major gas companies with a long list of conditions. Uniper gaining 4.9% on the back of that. Now, Bloomberg Surveillance Early Edition continues in the next hour with Anna Edwards in New York, Ed Ludlow here in London. We'll have plenty more, of course, on market moves. We'll talk fully on Japan and beyond. This is Bloomberg.
I think very soon we're going to be in negative year-over-year growth territory for earnings, and I think there's more downside than upside there.
Growth expectations for next year are not particularly vigorous. In fact, I still think the probability of recession is quite high.
Going into an expected recession, we've never seen corporate fundamentals to be better.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Ukraine's president is set for his first overseas trip since the start of the war. Volodymyr Zelensky will meet with President Biden and address Congress in Washington today. And Elon Musk confirms he will step down as Twitter's CEO as soon as a successor is found. The billionaire says he will still run the company's engineering teams. And a robust report, Nike posts another quarter of inventory build-up, but its sales and gross margin beat. Welcome to Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London with Anna Edwards in New York. Matt Miller is off, and Kaylee Lines will be hosting the US Close Show later today. Broadly, Anna, risk on appetite in financial markets, although I would point out you get the sense that we're kind of creeping towards the holiday season when you take a look at volumes. We're kind of getting past the euphoria of that surprise from the Bank of Japan, but still much to discuss in the show.
Yeah, certainly that BOJ move prompting a lot of activity in markets yesterday. Good morning to you, Ed. Very nice to see you there in London. Let's have a look at the Asian session that was then, Ed. And you talk about things looking a little more risk on, and they do elsewhere in the world. The Asia session looking a little modestly, just showing modest moves, and those to the downside. So MSCI Asia Pacific down 0.1%. Here's where we saw all of that action yesterday, and a lot of action earlier on this year, of course. Remember, on dollar yen, we were up at 150 in October. We were up at 136, 137 just earlier on this week. But of course, the yen strengthening on that BOJ move to 131, and we continue to move around that particular target area. This is the 10-year yield on JGBs, and this is where we saw the BOJ move yesterday and widen that band. So to allow it to move up to 0.5% in terms of yield, you'll see we're at 0.48%. So not all that far away from the upper bound that the BOJ has set there. The market perhaps testing that a little bit, but they know that the other announcement important yesterday from the BOJ. The BOJ comes armed, and it has QE, and it seems as if it is using the tools available to it to make sure that the market doesn't test just too much. Iron ore is up by 2.7% over in Singapore. I put this in because this is reflective of the China story, the reopening story, but also some of the policy initiatives being used in China that will become important for the property sector. And there's a lot of focus on property, of course, as we know, in the Chinese growth story. On to US assets, and actually it was a better day for US stocks yesterday than we've seen in the last few days. So stocks closing in the green for the first time in 4 sessions, and futures reflecting that a little bit, up by 0.7%. So perhaps trying to move beyond some of the most recent hawkish shocks that we've got from the Fed, from the ECB, and now perhaps even from the Bank of Japan as well. This is the 10-year yield. It spent a couple of days on the rise. You can see things have changed a little bit today, but those couple of days of moving higher for yields, leaving us at 3.67 right now. New York crude, WTI 76.92. Also a couple of days of consolidation around these particular prices, up by 0.9%. We had a report, of course, on inventory levels out from the United States yesterday. And Bitcoin at 16,871, not really moving all that much. Sam Bankman-Fried looks as if he's going to be moving, though, Ed, back to the United States, accompanied by FBI agents later today.
We'll move over to me in Europe. A similar story reflected here, that risk-on mode I was talking about, pushing higher in equity markets across most of Western and developed Europe. More muted gains here in London, up about 0.5 percentage point on the FTSE 100. We're seeing a rebound, particularly in rate-sensitive areas like in retail and other leisure stocks here on the continent. Flip up the boards, though, because what we really see broadly is a rebound on the Stock 600 Europe after the kind of surprise and euphoria I was talking about from the Bank of Japan, up 0.8% on the Stocks Europe 600. A big part of that, the surprise earnings out of Nike, driving some of those consumer and retail names here in Europe. Stabilization in bond yields, really a part of the story as well. But as I mentioned at the top of the program, Anna, we're just a few days away from the Christmas period, the holidays. There are lower volumes. I think last I checked, we're trading at about 75% of the 15-day moving average on the Stock 600 or Stocks Europe 600. And you look at the yields on major duration bonds, particularly here in Europe. And actually, we are normalizing. Similar in the currency space as well. You saw euro-yen break through its 200-day moving average to its lowest level since around September, at one point August in Tuesday. But we've kind of taken a step back and we're relaxed. We're digesting if this really is the end of the era of negative rates. We can debate, you and I, Anna, what kind of a policy at all and how effective negative rates are. But at least from a standpoint of markets this Wednesday morning, we're hitting pause a little bit on all the excitement.
Yes, perhaps a little bit of a lull in things. It certainly was exciting yesterday from a macro perspective. Let's move on to geopolitics, because there's still plenty to talk about there, of course, Ed. And Volodymyr Zelensky will visit Washington today to meet with the President, Joe Biden, and address Congress. It's his first trip outside Ukraine since Russia's invasion. Joining us for more is Bill Farries, a Bloomberg editor who has extensive experience covering U.S. national security. Bill, thanks for joining us on the programme. So what is Zelensky's goal for this visit? Usually when we see him addressing other political bodies, it's because essentially he wants their political and financial support.
He's flying into Washington just less than 2 weeks, really, before Republicans take control of the House of Representatives. Of course, he's been promised $2 billion more in military aid, including a Patriot missile battery that should help him better defend his airspace from Russian attacks. But this this will give him a chance to really meet in person with Republican leaders who are going to have control of a lot of the purse strings in Washington starting in January. And the Republican Party has been split, but there is definitely a faction of it that has a lot of questions about whether the U.S. should continue to fund Ukraine at the levels it has. You've had some Republicans saying that they don't like the, quote, blank check that they feel Washington and the Biden administration have been giving Ukraine. He'll get to talk to some of those folks in person and try to make his case.
Bill, thank you for joining. I want to pivot to the other big story coming out of D.C., which is the House Ways and Means Committee voting to release Donald Trump's tax information to the public. What's the latest in our reporting? What is it that we think we will find out when those documents hit?
Well, we've also already learned quite a bit. The Ways and Means Committee issued a report from a nonpartisan group of accountants that suggested there were a lot of red flags in the documents to date that should have generated some kind of an audit. These include loans to his children that it's not clear if they were ever expected to be paid back. It includes charitable deductions that were not well documented and other business expenses that accounting experts and tax lawyers say should have prompted an audit. In the coming days, we expect to see the actual tax returns from 2015 to 2020. There are some redactions going on for personal information, social security numbers, things like that. But it should be among the most complete pictures of Donald Trump's taxes that we've seen to date. And it's the kind of thing he's been fighting for years to keep out of the public eye.
All right, our thanks to Bloomberg's Bill Ferries. Now, Elon Musk has confirmed he will step down as CEO of Twitter. The billionaire says he'll run Twitter's software and server teams once he's found someone, quote, foolish enough to replace him as chief. Alex Webb of Bloomberg Quick Take joins us with more. He will step down when he finds the right candidate. What else do we know?
Well, he will step down, but he also won't step down because, as you say, he's going to stick around to run the software and engineering, or the server and engineering teams. He had 7,500 employees when he joined. 5,000 have left. The 2,500 who are there, one presumes quite a lot of those are software engineers, hardware engineers, if it's for the servers. So he's still going to be running, it seems, quite a large chunk of the business. He's also going to be the person who is the controlling shareholder. So whoever comes in, he's likely to be breathing down their neck quite a bit, one can well imagine. Now, the thing is that he, and our colleagues reporting has demonstrated this, if you're CEO of Twitter, you've got to meet with brands, you meet with advertisers, you go out, you sell Twitter to the people who will ultimately be giving you money. The reporting from Bloomberg sort of suggests he's not been doing a brilliant job at that. That suggests that whoever comes in the door, you know, the Sheryl Sandberg type character is someone who's very well suited to this kind of role, is about selling Twitter to your potential customers.
OK, Alex, very good morning to you. I really can't imagine a scenario where Elon Musk reports to somebody else running the business. Quite fascinating. What do Tesla investors make of all of this then? Of course, they have a vested interest here because they've seen their share price deteriorate, in part because many people think that the CEO of Tesla, Elon Musk, has been distracted by his Twitter activities.
Yeah, in a sense, like the Tesla story is far bigger than the Twitter one. It was an $800 billion company. It's now a $450-odd billion company. It's hemorrhaged value since Elon Musk took over at Twitter. And the past week has told a very interesting story. We saw the stock lose about 16% of its value the last literally the last trading week. Then it recovered a bit when investors saw that Elon Musk was looking like he was going to step down if you followed the results of the poll. Then yesterday's response that he would step down as CEO but still stick around at the company in a different role, well, we saw Tesla stock punish again. It fell 8%. So, you know, this is the sort of background noise that actually, in a sense, maybe should be the foreground noise because it's a far bigger company, has far more employees. It's just that perhaps Twitter has broader social impact.
OK, our thanks to Bloomberg's Quick Takes is Alex Webb. Now, in earnings news, Nike's quarterly sales and gross margin exceeded Wall Street estimates. Global sales at the world's largest sportswear company rose 17% to $13.3 billion, beating estimates of $12.6 billion. Joe Easton, Bloomberg's stocks reporter, joins us now with more. There was a pretty sizable reaction in after-hours trading. They kind of put a lot of emphasis on inventories, the idea that they're coming off a low base from a period a year ago where supply chains were in chaos. Now they're more elevated. What were the other takeaways?
Yeah, so it's really been a bit of a blowout quarter for the company. As you mentioned, their sales up 17%. The strong points in terms of geographies were North America, as usual, and also EMEA as well was pretty strong. The negative was China, which is still down, so sales were down around 3%. That's actually better than some analysts expected, but there were some hopes that that would improve even further. So there were some negatives, the discounting as well. This kind of plays into the whole consumers trading down situation we're seeing across retail, given the cost of living crisis. But definitely a very strong report, and we're seeing that spreading through into a lot of the peers in Europe as well today.
Yeah, so we're seeing some of the peers in Europe benefiting from the positives and not focusing too much on those negatives. Tell us a little more about those then, because of course we've been braced for negative themes, I suppose, coming out of this earnings story, as many people talk about the extent to which earnings expectations need to be downgraded for companies more broadly.
That's right. So a lot of the retail and even sports maker companies in Europe, those shares are down heavily this year, as you would expect, some of them down as much as 50%. They're gaining today. Puma, Adidas are strong points. And also what's probably more interesting to me is the retail companies like JD Sports and also Zalando in Germany. These firms have partnerships with Nike, which allow their customers to access products that would only normally be available direct from Nike. And Nike actually commented on those partnerships in their earnings call, saying this is really helping their European sales. So that's definitely a strong point. But as you mentioned, there are concerns going into Christmas that people are going to pick out the cheaper options for their presents, and that could weigh on possibly the following quarter's earnings report for those companies.
Joe, thanks very much. Bloomberg's Joe Easton joining us there with the Nike story and the read across into other European names that operate in a similar sector. Now we'll look at some of the stocks that are moving in pre-market trading here in the United States. And let's start with Tesla. Cathie Wood, some ETFs backed by the ARK Fund are loading up on Tesla stock, it seems, or at least buying a little bit more of it. And so as a result, we could see some movement higher in the Tesla share price. Or is this going to be a response to what we heard about Twitter and Elon Musk reducing his role there, if not entirely stepping down? FedEx in focus, profits topping estimates, higher prices. They're able to pass those through to customers. They're also cutting costs, of course. The share price looks as if it's unchanged in the pre-market, which perhaps a bit surprising. They did talk about package volumes dropping, and so maybe that's a negative to outweigh the positives. Also focused on Carnival Cruises then, Ed. This cruising business reports a little earlier than some, and so gives an outlook for the following year, and is going to be reporting before the bell today. So a big focus on what they can do. But just like Tesla, this is another stock that is down substantially. In fact, by a similar percentage year to date, down around 60% year to date, Ed.
God, I'd certainly love a Christmas cruise, believe me. Anyway, coming up, Joost van Leenders, Van Lanschot Kempen Senior Investment Strategist, and on China's COVID policy, Catherine Bennett, Chair in Epidemiology at Deakin University. Plus later today, an exclusive interview with the German Finance Minister Christian Lindner. That's at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London with Anna Edwards out in New York. I want to jump straight into my Bloomberg terminal. The headline of the last 36 hours is the Japan 2-year breaching that threshold, going above zero, very just. The other point of discussion, Anna, is this global era of negative yields ending. This chart shows that the pool of global debt with sub-zero yields down to about $686 billion. But a year ago, we're at the 11 trillion mark, which shows how quickly this picture has changed. And all that's left in that basket, in that dump of negative yielding debt, is short duration JGBs. So we're still euphoric. The market's a little more muted this Wednesday, but it's still our main point of discussion, which is fortunate because Noor Al-Ali, our Bloomberg Markets live editor, joins us here in London. There's a lot going on. I think, let's be honest, that volumes are a part of the factor this Wednesday. But what do you see in markets as a sort of ongoing reaction to that surprise BOJ action?
Absolutely. I mean, you've touched upon a really big theme here that we're going to start talking more and more about into the next year. You know, that end of, sub-zero rates here is a big moment for central banks, for inflation. What it indicates, though, is that inflation is probably going to stay a bit higher. So, team transitory, probably not in the really good graces right now. But also, we're looking at a really important theme from this year that's being tested as well, and that's King Dollar, right? So as the yen, pressed through the highs yesterday, we saw the dollar weaken a bit, and we saw that kind of, risk aversion almost, fade, and we're seeing now that risk positive momentum really carry through. Now I'm gonna caveat this by saying we're in holiday seasons markets. If you look at this really cool function at my screens right now, it's AVAT. For the stock 600 index, you'll see that actually the average volume for this time of day is about 30% less than normal. So my understanding is traders, not most of them are at their desks at the moment, but this is a thing that they're definitely going to look at coming into the next year.
And from that, Noor, good morning, good to see you. From that, I wonder what happens to the balance between stocks and bonds next year. A lot of people talking about the attractiveness of bonds if we start to have conversations really increasingly dominated by recession risk, Noor. That could be something that pushes money into bonds and then obviously pushes up the price, pushes down yields. I wonder what that does to the pile of negative yielding debt, but that's for another day.
Yeah, absolutely. And I mean, first of all, it's nice to see you in New York. You're usually sat here right next to me. The thing here is really a focus on the 60-40 portfolio. We've been talking a lot about that. Bonds have had probably their worst year among their worst years in recent decades. So did stocks, and that's been a very interesting theme this year. But look, that's been mostly linked to that dollar haven status. You've had yields rising because central banks, particularly the Fed, have been pressing on with their inflation flight. Now we're seeing a bit, where a lot of people are saying, well, hold on, we could see that haven status being restored for bonds. Maybe stocks, we're not really so sure. We can see them probably rising. So there's a lot of question here, and we're really reconsidering some of the trading themes that we've seen this year and wondering how long they're going to last into the next year. Now, the 60-40 portfolio is probably where it's going to come out. Whether or not there's going to be a supportive environment for bonds really depends on whether the Fed pivots or not, and that's another contentious debate that I don't think we'll have much time for as well.
Okay, you can have that, Noor, over the festive season and into the new year, and we'll continue to have it back here on set in New York and in London in 2023. Noor Al-Ali, thank you very much for joining us this year and no doubt into next from the Bloomberg Markets Live team. And remember, if you want up-to-date market analysis, you can join the Market Live team with their blog. MLIV Go is the function to use on the Bloomberg terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in New York with Ed Ludlow in London. Now, keeping you up to date with news from around the world, here's the first word. A US House committee has voted to publicly release Donald Trump's personal and business tax returns from 2015 to 2020. It caps a 3-year legal saga initiated by Democrats to obtain and release the former president's closely held financial documents. The vote comes in the waning days of the House Democratic majority and follows Trump's referral for criminal prosecution by another House panel, that just yesterday. Now, today, federal authorities will whisk Sam Bankman-Fried to the United States to face a range of criminal charges related to the collapse of the FTX crypto exchange. Bloomberg has learned the FTX co-founder will sign a set of extradition papers today at a Bahamas court and take a non-commercial aircraft back to the United States, escorted by FBI agents. UK government borrowing surged in November, with the budget deficit coming in at £22 billion. That's the highest monthly total on record and almost triple last year's figure. Public finances have come under mounting pressure from rising debt interest payments and the huge cost of subsidising energy bills. And an estimated 4 million people packed the streets of Buenos Aires for a parade honouring Argentina's World Cup winning football team. So many people turned out that Lionel Messi and his teammates were forced to fly overhead in helicopters rather than travel through the crowd in an open-top bus. The president's office confirmed the players were flying over the crowds with the roads clogged due to what they called an explosion of happiness. Well, that explosion of happiness, Ed, has certainly been lasting a long time on the streets of Buenos Aires. I understand they've been partying since Sunday.
Yeah, and quite right. First World Cup title in 36 years, a country that's feeling economic pain, inflation, tight capital controls. There were videos on social media and reports of fans jumping off bridges, trying to land in the open-top bus just to get 30 seconds with Lionel Messi. I love football, Anna. I don't love football that much.
No, I don't think you'd jump on the top of a bus, even if it was for Chelsea.
Even if it was for Chelsea and our mortal enemy, Lionel Messi. But I'm happy for the people of Argentina, certainly.
Right, coming up on the programme, we will talk markets. Joost van Leenders joins us. Van Lanschot Kempen, Senior Investment Strategist. He'll be with us. We'll take stock of what we've learned from the BOJ this week and how much that is changing the narrative into 2023, or is it just adding more to the previous stories we were telling? That's next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition, and here is what you need to know. Ukraine's president is set for his first overseas trip since the start of the war. Volodymyr Zelensky will meet with President Biden and address Congress in Washington today. And Elon Musk confirms he will step down as Twitter's CEO as soon as a successor is found. The billionaire says he will still run the company's engineering teams. And a robust report. Nike posts another quarter of inventory build-up, but its sales and gross margin beat. Welcome to Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London today, where Anna Edwards, who curiously is out in New York. Matt Miller is off, and Kaylee Lyons will be hosting the US Close show later today. We are limping, I think it's fair to say, Anna, towards the holidays, but there is still a risk on appetite in markets.
Yeah, limping to the upside, I suppose, if you like. Yeah, limping in the sense that maybe volume's not what they would be normally. We are used to that this time of year, but yeah, we do have that sense of approaching the holiday period, into the holidays and into the new year, but we're doing it in some style, some positive style. We have US futures pointing a little bit higher this morning. S&P futures up by 0.7%, and that's following a decent session on Wall Street yesterday, actually. Stocks on Wall Street closing, or the S&P closing in positive territory for the first session in 4, coming as a bit of a positive. And that's despite the fact that we've seen yields going higher. So for the last couple of days, we've seen yields going higher. Things looking a little bit different this morning, but 3.68% is where we stand after we heard from the BOJ yesterday, and that caused a lot of people to think about how much money might leave treasuries, head back to Japan, more of an incentive for Japanese investors who are so active in US and European bond markets to put that money back home. New York crude, WTI, $77 a barrel right now is where we trade, up by around 1%. So also a little bit of risk on coming through there. And Bitcoin, pretty flat this morning, 16,876. The story, of course, around crypto, the one that people are talking about, even if it doesn't move markets anymore, is what's happening with Sam Bankman-Fried. And he's going to be coming back to the United States today, we understand. Let's have a look at some pre-market movers then, Ed. And we have Tesla in focus once again. I feel like this is always one of our pre-market movers. It does have that air about it. Up by 2.5% on Tesla this morning. Is this to do with the Twitter story and Elon Musk saying that he's going to be, staying with the business but not being CEO? He'll find somebody else to do that job and he'll do more of the engineering side of things. Cathie Wood is also adding to her holdings in Tesla amid growing criticism, or despite that criticism of Elon Musk. Also FedEx in focus, up by 4.2%. We didn't have much movement on this one last time we checked, but now it is moving higher. The company topping estimates, higher prices. They're able to pass those on to customers crucially, and they are cost cutting. They did report a decline in volumes, but that does not seem to be weighing on sentiment around the business this morning. And Carnival, the cruise business, up by 2.4% this morning, reporting earnings before the bell. And Ed, this is an interesting one because of the timing of the release we get from Carnival. Apparently it's one of the first cruise businesses to give us an outlook into the next year, or at least opens the window further into next year in terms of its outlook. Ed, what do you see in Europe right now?
Yeah, the equity story here in Europe is really a rebound in those rate-sensitive sectors. You look at the stock 600, up 0.9%, almost a percentage point. That, of course, driven by some of the feel-good that's come from Nike earnings. You look at names like Adidas, Puma, also making gains early in the session. Also a stabilization in yields, of course. We're getting over that news from the Bank of Japan earlier in the week. You look at the German 10-year Bund at yield around 2.3%, UK 10-year gilt 3.6%. We're taking a time out, as you said, Anna. We're kind of limping to the upside in terms of this risk-on mentality we see across financial markets. Less activity. We've certainly hit pause in currency markets. Just 24 hours ago, we kind of broke through this long-standing 200-day moving average for euro-yen to a low of around September lows, August lows, but now we're essentially just static. And we're waiting to see actually if there are further surprises from the BOJ to come in the weeks and months ahead.
Okay, so that's certainly the focus of the markets right now. Let's get to a conversation about the markets with Joost van Leenders, who joins us. Van Lanschot-Kempen, Senior Investment Strategist. Joost, nice to have you on the programme once again. I want to start with the BOJ because it's been so topical, such a big deal this week, essentially, and the impact on global investing and global assets, because there is this argument that if Japanese investors have more reason to bring their money home, higher interest rates anticipated now in Japan, then we might see flows leaving US Treasury markets, US stocks, European bond markets, for example. Is this something that's going to have an impact on your asset allocation into next year?
Yeah, as you mentioned, it had an impact on markets. We also saw obviously a big shift in a big rise in 10-year yields in Japan, close to the new target of 0.5%, but also US yields going up about 10 basis points as a reaction. Yeah. The BOJ really presented this as a sort of a technical issue to improve the functioning of the bond market and the corporate bond market and the transmission of monetary policy. But markets interpreted it as a more hawkish shift, clearly after the Fed and after the ECB came with their hawkish surprises the last week. So that was a big thing that markets had to digest. So when you look at our asset allocation, we're cautious. One reason is the growth slowdown that is being partly induced by the central bank tightening. And yeah, I think the although as I said, the BOJ presents it more as a technical issue, we think there is more to it than that. You also saw the expectations for rate hikes coming in Japan. Yes. So in that sense, it fits the pattern and fits one of the reasons why we're a bit cautious in our asset allocation still.
Okay, yes, and it certainly fits into the global pattern as you set out, Joost. In terms of that slowdown that you mentioned and central banks inducing the slowdown, do you think where do you see central banks blinking first? Which of the global central banks do you think will be most spooked by the slowdown that is of their creation?
Yeah, I would say the ECB, but it's interesting. It's maybe it could be that the Fed will pause before the ECB, and then it's not so much blinking. It's more that they've sort of achieved their peak rate, the rate that is enough to slow down the economy and bring inflation back. So we see the signs of inflation starting to fall in the US. So I wouldn't say that that's blinking. It's more like they achieved what they want at some point. For the ECB, it's interesting because I think their forecasts that they presented in the latest meeting are too optimistic. It's a very, very shallow recession that they have, but they're quite, you could say, pessimistic on inflation, that's more sticky. So if that recession is a bit deeper and inflation comes down a bit more, then yeah, they could blink in that sense. They've said that they will hike rates for a couple of more times, 50 basis points. Yeah, if the economy really slows and inflation falls, then they might backtrack on that. But the tone was very hawkish, and Lagarde was clearly on a mission to increase the expectations among investors for what the ECB is expected to do.
Joost, good morning from London. We talk about blinking, we talk about tone from central bankers. Part of the discussion now, moving it forward from the Bank of Japan, is on communication and trust. We have a story on the Bloomberg terminal. BOJ credibility questioned as traders test Kuroda's new 50 basis points red line. What is your takeaway on that issue of communication and trust? Do you see kind of other central banks being almost, I guess, inspired by the move that Kuroda and co took?
Well, I think when you look at Japan, even in Japan, we see that inflation is increasing and wages have started to increase. So you could say that the extremely monetary policy should be shifted at some point. I think it was expected more in spring, maybe the successor of Kuroda taking that decision, and the wage negotiations. So yeah, I think it makes sense in terms of credibility. Yeah, you could say that the credibility of central banks was undermined because of the stickiness of inflation, and that they're trying to regain that credibility. I don't think it was under so much pressure. When you look at inflation expectations, especially the longer term inflation expectations, they never got out of hand. So in that sense, I think the credibility was still okay of central banks. And yeah, also the Bank of Japan had to move at some point, and they decided to do it a bit earlier than expected, but not really unexpected in the sort of longer term view.
In your most recent communication, you wrote to clients that the job is not yet done for the Fed, for the Federal Reserve. What is the job, to your mind, that is left to do?
Well, I think what Chair Powell basically said is that everybody's focusing on headline inflation, and he's focusing much more on underlying inflation and on the labor market, and that underlying inflation is more sticky. The services sector inflation, which is more impacted by the labor market. We had wages actually accelerating. So yeah, the job is not done. There will be a couple more rate hikes. I mean, we're getting quite close, but not fully there yet. And so one message that he gave is the peak, which is a bit higher than everyone expects. And the other one is, of course, how long they will stay there. And there's a big gap between the Fed and the markets. There can be. I mean, a year is long, so having a big gap at the end of the year, markets may be right.
Right.
But
and crucial to
now the message is that there will be some more rate hikes.
And Joost, crucial to understanding that gap is perhaps different expectations about how quickly inflation comes down, whether it stays at an elevated level. And with that in mind, I was drawn to some interesting data on the US housing market yesterday. US rent inflation slowing sharply. A new index being built by the Fed, which looks specifically at those new rental agreements. So rental agreements agreed just in the last months, rather than very old ones, and suggesting that there is a lot of downward pressure there. I wonder if that gives us a sense of policy already enacted now having an effect.
Yeah, on the housing market, definitely. I mean, rents coming down, but you see, we had home builders confidence this week, which fell further. Sales are down about 30%. So the impact on monetary policy there is very clear. I mean, Powell basically divided up inflation in sort of 3-4 components. One is goods inflation, which is coming down, actually falling now. The prices are falling. Then you have energy, of course, which is falling. You have rental inflation or housing costs. There, Powell also acknowledged that private sector rents are falling, and that will feed into those numbers. And then you have the rest of core service inflation, which is over half of PCE inflation, and that's where Powell's concern is at the moment, and where he wants to see more progress. So he also sees the other components falling, but the message for now was, yeah, that's not enough to pause, and certainly not enough to pivot.
Okay, a pause and a pivot, not enough yet. Joost, thank you so much for joining us. Joost van Lenders from Van Lanschot Kempen with his thoughts on the markets, the Fed in amongst that, of course. Now, coming up on the programme, we'll talk about China's COVID policy. Catherine Bennett joins us, Chair in Epidemiology at Deakin University. We'll get into that conversation with her shortly. Professor Deakin waiting to give us her views on what China is up against right now. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with the National Association of Home Builders CEO, Gerald Howard. That conversation coming up later. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London with Anna Edwards in New York. Chinese workers with mild COVID are being told to go back to work as the country reverses its stringent COVID-0 regime. That's as authorities narrowed the definition of a COVID death, prompting concerns Beijing is looking to downplay the death toll. Joining us now is Catherine Bennett, Chair in Epidemiology at Deakin University. Good morning to you, Professor Bennett, and thank you for joining us. There's a concern here about the spread of COVID-19 across the country, principally first. Second, a story on the Bloomberg that's just crossed, worries emerging about the emergence of a new variant because of that spread. What is your analysis of both of those threats?
Well, we've got 20% of the world's population that hasn't been part of that community-wide transmission that we've seen across the globe. So adding that many people into the mix does help accelerate that risk of new variants coming along. We haven't had a shortage of them. There have all been subvariants of Omicron to date. The concern is that we might yet see something that's a bigger shift away. So the more infections, the more that might impact. But having said that, 80% of the world's population has been having serious waves of infection throughout 2022. So, we're adding 20% more in. It's significant, but it may not make that much difference. But the other concern about new variants is the potential for recombination between coronavirus that's live in animal species, particularly wildlife, that could cross into and recombine with human coronavirus. And of course, now that we're heading into, for the first time, the entire global population having the human coronavirus circulating in the sorts of numbers we have, that does increase that risk also of recombination and the formation of new variants that are a step change away from others, just as we see with flu. So that's the concern now, particularly in Asia, where there has been a history of these combination events because of the population size, and also the way farming is done with domestic animals, pigs around the home and so on. Though some of that is now changing, which might lower the risk.
So we keep in mind worries about new variants emerging, and you've set out some of the ways that can happen, Catherine. Very good to have you on the programme. Can I ask you for your thoughts on the type of, the size, the scale, of the death toll that we might see in China? And crucially on that, what reference points, what geographies are you looking at to help inform just how many deaths we might see? I mean, some people look to Australia and because of the way that it so effectively controlled the virus in the early days and then reopened. But it seems that what's happening in terms of reopening in China is so much faster than what happened in Australia.
Well, in some states in Australia, it was equally fast. They went from zero COVID, they'd avoided Delta, but opened just when Omicron was sweeping through. So they did see those first big waves. But the fundamental difference between China and other countries that practice COVID zero successfully is the vaccination coverage in the population. And it's not just the proportion vaccinated. By the time Australia opened up, we were moving into the booster doses, which were very important for Omicron. But we had over 95% of the population, the at-risk population, vaccinated. And we know the rates aren't as high in China. The other thing we don't really know in China is the effectiveness of their own vaccinations against Omicron. We know that the attenuated virus vaccines they used were not as effective as the mRNA vaccines in particular, but even AstraZeneca on some of the previous variants. But with Omicron itself, it's not really tested in a country with COVID zero. The countries that China supplied the Sinovac and other vaccines to were countries that now have hybrid immunity. They have gradually built up that protection from infection as well as the coverage with vaccination to ease that transition. In China, you have a population with very low infection rates by all counts. And so that's going to be the big transition going into a serious wave. And the final thing to say in the comparison that's a challenge is China is opening up now when there are multiple variants around. And that poses a different challenge to the health authorities in trying to contain spread because it increases your risk of reinfection.
We're trying on this program, Professor Bennett, to understand logic behind policy, right? We think about here in the UK where I am living with COVID. How does a policy like living with COVID compare to COVID zero? What is it that you think authorities are trying to achieve with the actions they've taken?
Well, COVID zero, certainly in countries like Australia, was a heavy suppression policy put in place until we could build the vaccine protections to allow a safer transition. And by all accounts, that's worked for us. If you compare us to countries like Canada and Denmark that weren't able to close their borders, but had similar control measures in place throughout, we had, half the death toll per capita of those countries, and significantly less than other countries that had much more wide transmission, including the US and the UK. So it did help us transition. We now, of course, see death rates. We had a difficult year in 2022 with that transition to community-wide spread. But at the same time, our high vaccination rates did protect lives. And so we've transitioned to a point now where we are comparable to other countries, but without the total loss of life at the same level. China, if they actually did as well as Australia in terms of that vaccination protection and getting antivirals out to try and reduce the number of people who need hospitalizations in this surge that they're now moving into, they would still be expecting nearly 1 million deaths because of the sheer size of the population. But the worry is that it will be overwhelming, and if the vaccines aren't as effective and their coverage isn't as high, particularly in the older, vulnerable population, that it will put more pressure on the health services. That will cause more people, for other health reasons, to not have good health outcomes, and that could escalate quite quickly. So that is the concern, that it's not going to transition in the same way.
Yes, I know. I saw a 2020 data suggesting 48,000 ICU beds. We'll look for more up-to-date information, of course, as the pandemic continues in China on that and how it is coping. Catherine Bennett, thank you very much, Professor at Deakin University. Thank you for joining us. Coming up on the programme, we'll run you through some of the key events to watch out for today. Markets a little quieter than they were yesterday. Thankfully, perhaps. This is Bloomberg.